Hello, folks. This is Brandon Chapman. It's the Theo Trade video for September 15th, 2025. And we're talking about today about the hidden message from the market to the Fed today. And it's interesting once you begin to scratch just beneath the surface at what this is indicating about the potential movement in the market for this week. Now, we're about 20 minutes before the close right now. The S&P is up nearly 0.4% or 0.35%. And we look at the overall tenor of the market. We're kind of rising. We're drifting from our highs right now. We break into an intraday chart. You'll see we have the early strength and, again, the fade throughout the course of the day. But overall, holding on to gains. Well, where are these gains coming from, right? So if we kind of isolate sectors here, you'll see communications. You'll see cyclicals. Well, communications, what do we got there? We got Google, for example. Google's up 4% on the session. And again, this just belies, just kind of suspends gravity at this stage, up 4%. We think about cyclicals up 0.7%. What's in that one? We look at Tesla, for example. Tesla up 3%. Now, we look at the intraday trade. We gapped up and we traded a little bit higher and we faded off our highs quite considerably today, by the way. And again, we got technology in there. Well, let's take a look at some of the big tech names. NVIDIA basically down a little. What's Apple doing? Apple's up 0.8%. What about Microsoft? You go down this, Microsoft up nearly 1%. So you can kind of see Microsoft and Apple, for the most part, carrying technology. At the end of the day, this move in the market today is about the Mag 7. Mag's an ETF that represents the Mag 7 is up 1.68%. Let's take a look at the breadth. So let's go to Market Watch here. We're visualize. We'll change this to Index Watch. And let's just select the S&P 100. So I'm going to come down here, S&P 100. We got 42 advancing and 60 declining. But look at the value, the capital that's trading on those advancing issues. And again, you look right there, Google and Goog, right? We got Intel up quite significantly. We've got Oracle up. We got Tesla up. Really just dominating the market in terms of actual capital that's trading. And so what we're seeing is, again, the breadth of this rally just isn't there. We expanded out. Let's take a look at S&P 500. And again, we see 185 stocks advancing, 314 declining. You look at this advancer, it's Albemarle up over almost nearly 6.75%. We got ANET. So we got some other stocks kind of participating here. We got Google and Google. You got Estee Lauder, up over 4%. So you go to this list, again, a lot of these, there's some smaller tech names in this mix. We got Clack, for example, that's MGM. What's going on with advertising there? You'll see STX at Seagate Technology. We're talking about hard drives or storage, for example. Western Digital's up strongly. And so again, what we see is that there's a complete lack of breadth in terms of carrying all ships higher. But you'll see by virtue of the capital, again, many of these are the biggest names out there that are seeing most of the flows today, and thus the market rising. Now, as we consider this, we're thinking about, well, look, we got a Fed announcement on Wednesday. What's the Fed going to announce? A 1/4 point cut. Are you sure? Yeah, we're pretty dang sure that that's what's going to happen here. Okay. So it's pretty well a foregone conclusion. The Fed is going to announce a rate cut on Wednesday. But let's take a look right here. For example, let's go to the FedWatch tool, and you'll see right there, and we'll come down. We'll see 96% chance we're going to 4 to 4.25. Well, the current target is 4.25, 4.5%. That's a 1/4 point cut. Again, where's the surprise in this? There's none. So if we're seeing that we have a lack of breadth here, we have the Fed announcement on Wednesday. Why is gold up here 1%? I mean, are we talking about a surprise move? We're talking about right now the fact that the dollar's diminishing in value as gold is rising ahead of the Fed. I thought the rate cut was already baked in. That's what happened back here. The move in gold began on the 22nd. The move began with Jackson Hole. Is this suggesting that the Fed's going to announce more rate cuts than a 1/4? I don't think so. It's pretty well baked in the cake. It's a 1/4. Now what's the matter? We just got to look forward. What's the Fed's plan next meeting and the next? We're basically looking at a 1/4 point cut every meeting this week. And for you that are going to call and say, well, what about inflation? Well, last week we saw year-over-year inflation. Oops, I got to bring in the right symbol here. Year-over-year inflation at 2.9%. Projected inflation is under 3% or at 3%, depending on the time frame we're looking at, 5 years or next year. The point being is that the current Fed funds rate of 4.25% to 4.5% or 4 to 4.25%, guess what? It's higher, right, than the inflation rate. We're talking about restrictive policy. Fed's talked about this quite a bit. So what's the trepidation? Why is the dollar weakening and gold going higher? And what else? We've got the canary in the coal mine here with the VIX. The VIX is up almost 1%, 1 point rather, or 6.71%. We closed on Friday at 14.76. We're at 15.75 here. Now, Don posts his values based on Friday's close for the expected move for the week. I believe the expected move for the week was 93. We're staring at that, and one of us commented, and we kind of all generally agreed, wow, that seems kind of small for a Fed announcement this week. Well, again, isn't it foregone what the Fed's going to do? Here's the deal, right? The fact the VIX is rising here suggests that Friday's close did not accurately reflect the potential volatility this week, because we're not seeing the market move up a lot. We're definitely seeing a bias towards Mag 7 companies. Shouldn't the VIX be down? No, what's happening is it's pricing in higher volatility. Now, is that purely negative? No, but generally speaking, a rise in the VIX does portend, right, or generally coincides with selling. And so we're seeing today is that the VIX is rising. The VIX is getting a bid ahead of a week where everything appears to be settled, or maybe it's not. As we look forward, if the Fed cuts a 1/4 point, which has largely been expected and has been priced in across the board, right, in the S&P, well, how much have we rallied since the 22nd? There's Jackson Hole, right? This is our low. We're basically at all-time highs, and the VIX is rising. If we look at skew, this tells you in terms of the hedging that's going on, skew is about 150 as of Friday's close. I'm interested to see, does skew rise today? With the rise in the VIX, that would be unusual, but it does happen. A rise in skew tells you what? It tells you that hedging activity is on the rise. Wouldn't that be reasonable this week with the Fed announcement? The VIX rising, hedges are a little bit more expensive, but not a lot. Gold rising 1% when we already know what's going to happen. The dollar's weakening here. The fact of the matter is, this isn't a bad time to consider taking profits if you've got them, right? Do you want to have all of your risk going to this week? What basically the VIX suggests is we're basically raising the bar in terms of volatility expectations, and we'll be able to see the skew later today to say, are hedges being increased or decreased? Is the skew rising, which means hedges are putting on, or does it fall, meaning hedges are being taken off? And when I say hedges, I'm talking about what? Selling calls and buying puts. Well, clearly when the VIX rises, it generally means they're buying puts. Maybe they're buying more puts. Are they selling calls? Does skew increase? This is what we want to see. Does skew rise with the VIX? If so, that's going to tell you something. That's going to tell you there's going to be a fair amount of trepidation going into Wednesday. What we might actually see in the market is we've bought the rumor and now we're about to sell the news. The jobs market certainly is showing a lot of weakness. Again, when the jobs market starts to flip negative, you know you're in recession. And if we go back and subtract all the jobs we've had over the last year and a half, supposedly, and we realize that these are not real and they take those out, we've probably seen a lot of quarters here or months where we've had negative job growth. And when you see that, you know you're in recession. Why? Because it's not a leading indicator. So there are recessionary forces. We are seeing some, again, underpinning weakness, a lack of breadth to this rally. But guess what? On Thursday with the CPI print, we had this great rising wedge formation it's a bearish formation, expecting to break out here. But guess what happened? The CPI print last week on Thursday resulted in a breakout, right? We've now become even more extreme in the very near term. And what the CPI print was actually hotter than expected on the headline number. The core was in line with expectation, but still above the Fed's target rate of 2%. But guess what? The Fed has not used a 2% target rate for years. They basically threw it out the window, said we're going to be willing to accept higher inflation, and they've been willing to do that ever since. Is the Fed about to engage in the same policy they did a year ago with now a softer labor market, inflation lower than expected? Last year, they cut 1%. Are they about to do the same thing here? The reality is there's a chance the Fed doesn't deliver as much as they delivered last year. And the fact is the market may not receive that as positively as we've received the buildup to that announcement. Gold today up 1%, dollar weakness. Again, there is some degree of trepidation, not wanting to hold dollars. Well, again, gold going up. What's going to happen with TLT and bonds? Bonds are pretty extended here in the near term. They're overbought. Why is gold getting bid here? Is there the chance that, again, we might be seeing that we might be selling treasuries and be able to convert it to dollars, to convert it to other stuff like what? Maybe Chinese yuan? Are they about to buy their stocks again, right? I mean, again, I'm implicitly saying they've been buying their stocks for a while, but KWEB's up 0.85% today. FXI is up 0.67%. Again, the weaker dollar benefiting it. And as we look at the time and sales today on this, what do we got? 20,000 calls bought on the 21 November 43. How did I find this? I use the console, right? The Ghost Print Surveillance console. It makes it easy. Now, this certainly makes it easy to see once you know where the activity is. So I'm showing you here, but it's easy to identify these kinds of prints using the console. So again, what's about to happen in the market this week? This creates a lot of uncertainty, the rise in the VIX, and I think the reality is it's probably reflecting accurately what may happen after the Fed announcements. Maybe we see a bid going into yet tomorrow and maybe even to the Fed announcement. But there is a chance here. And when we look at the S&P 500, we're looking at what we're trying to assess. Is the upside opportunity as great as the downside potential? I don't think so. And that's exactly what SKEW's telling you. The higher SKEW says, yes, the default position with a 150 SKEW is the market grinds it out to the upside. But the downside risks remain and are actually more elevated the higher the SKEW gets. So I'm really interested today, keying off what happens in SKEW as an indication whether hedges are being put on. We're definitely seeing that there's probably some put option buying today, which is causing the VIX to rise. We need to normalize expectations because we came into this week with too low of thought process or expectations for volatility, and we're seeing the VIX market start to reprice that. Folks, that's what I've got for you in today's video. I'll catch you back next week, but we'll get to see exactly what the market plays out in the aggregate post-Fed statement. And again, I'm looking for a potential that we buy the rumor this last week, the week before, that we're going back to the 22nd, and we actually possibly sell the news. That's the hidden signal of the market today. And it will catch you back next week. Thank you.